Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 20802379226, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done. When you're in need and don't know where to go, pick up the phone and call mom.
All right, so welcome to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom. And today we are going to be talking about whether or not I feel that the housing market is going to crash. So recently, as we all do, I, like to flip through TikTok and Instagram and YouTube when it's just downtime and I've got nothing to do. And I have been coming across video after video of different people, stating that the housing market is going to crash. And although I listen to them and I want to take into account what they are saying, I am not agreeing at all with their reason behind why they feel that the housing market is going to crash. So we are going to talk about that today. I think that this is something that is great to talk about because there are many people who have either not jumped into the housing market yet and they are under the false pretense that if they just wait longer, that they will be able to get into a home at a lower price. There are a lot of people who have been waiting to sell their homes, so they are already homeowners, and they would really like to be able to sell and move, but they have been holding out and waiting for interest rates to drop further before they jump into the market. So today we are going to talk about what I've been watching and listening and hearing. And again, none of these people that are making these videos are anybody that I could even throw out a name. I don't recognize the name. They're not somebody that I would say is someone that you should be listening to. But at the same time, it is social media and it is out there and it is, I believe really scaring people. And so I want to talk about this. I think it's going to be great. I can see that my dad jumped on. So my biggest fan is here today. So Dad, thanks so much for joining. And Annette got on and said, happy Wednesday, and happy Wednesday, Annette, to you. And I do want to remind everybody that this is an open show. I want you guys to put your questions into the feed. I want you to ask them. I will read them out loud. I will answer them. We are interactive here, and I want you to get the answers that you're looking for. And I do also want to tell you guys that I'm very, very casual today. I woke up this morning with an awful headache, and I was like, hair not happening. Tons of makeup not happening. So you guys are getting the raw deal here. I put a little lipstick on and a little bit of mascara, and that's about it. But anyway, welcome to the show. Let's jump right in. Let's talk about, is the housing market going to crash? So the first thing that I do want to give you is the explanation that I've been hearing as I've been running across these, these social media posts, these videos that people are doing. And the explanation that I am hearing, so if you've heard this too, then this might resonate. But what they are trying to say is that as interest rates drop, that there have been so many people who have been waiting to list their homes for sale and to make a move because they don't want to trade their 3 or 4% interest rate. Some of you out there actually have a 2% interest rate, but they do not want to trade that interest rate for, let's call it, a 7% interest rate. And so what they're trying to explain and what they're trying to say is that as interest rates come down, that we are going to see a flooding in the market of homes available for sale. So when the market floods in inventory, then that would naturally bring prices down because there's going to be more of a buyer's market than a seller's market. So yes, I can kind of sort of see what they're trying to say there, but we're going to jump into the nitty gritty of that. We're going to really explain what has been going on, what those sellers have been doing, and whether or not, is that truly going to happen? Annette did jump on, said you look great. So Annette, thank you so much. I appreciate that. That makes me feel good. But let's jump into that. So number one, yes, the answer is yes. These people have been anybody that owns a home today that has been thinking about selling their home and wanting to move. So whether that is that they want to downsize, kids have moved, or whether they need to upsize because they've had more kids or they've just run out of space, whatever that reason is that they need to make that move, many have actually put that plan on hold. So the normal cyclical cycle that we would see year after year after year, just by, children getting older, becoming adults, graduating college, getting married, buying homes, first homes, second homes, and again, people retiring, downsizing, things of that nature. We haven't seen that movement. Everybody's kind of been sitting in a stalemate. So now let's talk about those people. So those people want to make these moves, right? And they haven't been making the moves because it is better for them to keep the interest rate that they have. So what are they going to do when interest rates do come down? So number one, many of them that own homes already have a ton of equity in their property. So when you have that kind of equity in your home, because property values have gone up so far, are you going to sell that home and get rid of that interest rate that you may not ever get again? I mean, let's talk reality here. We're probably not coming back down to low 4s and high 3% range, not anytime in the near future, not anytime probably within the next 4 or 5 years. It would take something that is, out of our control or economic changes to be had before we would see something like that take place. So realistically, when interest rates come down to their, kind of stabilized level, we're anticipating that we're going to see low 5s, high 4s, right? So somewhere between 4.75% and 5.25% is going to become our new normal. So if you have a home that has an interest rate of 3 or 4% and you've got a ton of equity in that home, are you going to sell that property? Or are you possibly going to hang on to it as an investment and go buy yourself something new? So some of those people that have the plans on hold to go buy something else because they're not willing to take an interest rate at 7%, they may not necessarily run out and go put their home on the market. Now, there's also a bunch of people that will want to put their home on the market because now interest rates are at a more forgivable level, right? If we're at 4.75%, 5.25%, interest rates are going to be somewhere that are going to make things more affordable, not necessarily that far off of maybe that 4% rate that they currently have. And so they want to sell the home and they want to go buy another. So we will see, more inventory come to market. But when we see more inventory come to market, we're also going to see many more buyers come to market. So we're going to have, there's going to be more inventory, but there's also going to be more buyers that are out there looking. So everything is going to kind of move together in supply and demand. Right now we are very, very low in supply, right? We know that we have a shortage of properties that are listed for sale. Now we have a bigger inventory than what we had in 2020, 2021, and 2022. So our inventory today is getting better, but we are still only at about a 60-day inventory level. So enough homes on the market to sustain about 60 days, where an average, the normal, what they say is a normal inventory, we've really got to be beyond 90 days. They really like to see about 120 days in inventory to call that a normal market. Now in 2007, 2008, 2009, when everything crashed, when we had our big housing recession, back then we actually had housing inventory that was like 6 months. We had 180 days and sometimes bigger, depending on what was going on. Now, we're not going to see that kind of inventory again because, number one, we're going to bring more buyers to market, even though we bring more inventory to market when interest rates do come down to sustained levels. Number two is that we're not going to see those foreclosures. Too many homeowners have a ton of equity. we need those foreclosures. We need those banks to get foreclosures and for the banks to price the home lower than what the last property sold for in, a particular housing development or a housing tract. We need to see those foreclosures come to market at lower prices for then a new home seller who wants to try to compete and be in, the possibility of people wanting to buy their home. They have to come down to meet those foreclosure, listed prices, right? And then we just kind of see things start to tumble. We're not seeing the foreclosures coming. We're not seeing the default rates increasing. Too many people have a bunch of equity. Right now, if you're having a hard time making your payment, you're reaching out to your lender, you're asking for help. If they cannot help you for some reason, are you going to let your home be foreclosed on when you've got 10, 15, 20, sometimes 40 or 50% equity, depending on when you bought that home? You're most likely not going to do that. You're going to sell. So again, we're not going to see that flood of foreclosures come. We are going to see inventory levels rise, but we're also going to see demand rise. We're going to see a lot more buyers come to market, both current homeowners looking to make moves and first-time home buyers that do not own anything, because now interest rates have come down and they have an opportunity to, get into a payment that is more affordable. So I wanted to debunk some of those things that I'm starting to see. William did jump on. He says, hope all is well. I have had my home on the market since January with only 2 offers. Both offers were way low and I countered with no comeback. So I will say viewings have gone up a little. So, the thing right now is, again, you guys have to remember that we're kind of at a stalemate. And so I do want to talk about those sellers as well and them trying to drop their prices. William actually being a very good example. So we're kind of in a stalemate right now where interest rates are high and they are higher than what is really affordable for most home buyers out there. So when interest rates are high and home values are high, it makes the housing market very unaffordable. And that is why we're seeing kind of this lull in how many homes are closing and how many sales are happening, because things are just too expensive in both directions. However, sellers like William, who probably has a great interest rate on his mortgage, are not in any hurry to start dropping the price on their listing to get somebody to write an offer, or they're not willing to accept an offer that comes in that's very low in comparison to what they're asking for. They would rather just sit and wait. They're in no rush. They've got a great payment. They've got a great interest rate. It's better for them to just hold tight to get what they want for their home. So the same thing is going to happen as well as I go back to, what these videos and these social media posts are saying about this housing crash that's supposedly going to come when we see interest rates drop, because more housing inventory is going to come to market. And then there's going to be this, there's going to be this battle between sellers of who's going to get their home sold by lowering their sales price. Well, again, these are the same people that have decided to put life on hold, that have decided not to move down, not to move up, not to sell, because they have a great interest rate and a great monthly payment. So why in the world would they all of a sudden get competitive with the price that they're willing to sell their home at? They're just not going to do that unless, again, they really need to get it sold and they need to compete with other sellers that have prices listed low. Well, what are the sellers with prices listed low? Those are the bank foreclosures. But where are the bank foreclosures? They're not coming. Since the huge recession of 07 and 08, and when the CFPB rolled in and that Dodd-Frank Act was written, the whole point behind that was to give the mortgage industry and the banking industry guidelines that we had to adhere to when giving a borrower a loan. The problem with the housing recession, the reason that we got into the mess that we did, and there were lots of reasons. I'm just going to give you a really simple, kind of dumbed down explanation. Anybody with a good credit score could get a mortgage with zero money down. You can't write those responsibly and think that someone that is getting that loan with zero money out of pocket, not verifying their income, that they're going to continue to make payments. What was happening is that the home values were going up so fast that people were putting on the application that they made X amount of dollars that they did not make. They were buying these homes to hold on to them for a month or 2 months, and then they were turning around and flipping it for a profit. So when everything stopped and came to a halt and interest rates went up and buyers stopped buying and the home sat there and that person was on the hook for that mortgage payment that they couldn't qualify to make, that's when the homes started going into foreclosure. So since they came in and they regulated the banking industry with the type of loans that we can write, we have been qualifying borrowers to be able to make their payments. So sure, things can happen in normal life, which is very normal, right? We're always, no matter what kind of economy that we're in, no matter how good of a job that we do in qualifying somebody, there are always going to be circumstances where something could happen, that a property could go into foreclosure. Someone might lose a job and it was very unexpected. Someone might get very sick and can't work and they lose that income. A married couple, there could be a spouse that loses a job or an income, and it took 2 incomes to be able to make that home continue to go. So that is very common. There are going to be foreclosures in every single type of housing market. That is just par for the course, no matter what job that we do as lenders to make sure that we're qualifying somebody to be able to make their payments. However, the majority of the people right now, we've got a strong job economy. So we've got a lot of people working at the moment. We have every person that has got a mortgage at this time has qualified, showing W-2s, showing pay stubs, showing tax returns, even self-employed borrowers that go into some of our non-QM space, our non-qualified mortgage, more of an alternative type of financing. They're showing 12 and 24 months of bank statements. Investors are able to get investment type loans where they don't necessarily qualify by income, but the property itself that they're buying, they're putting 25, 30, 35% down. We are getting the appraiser to verify rents that property can bring in. We are making sure that those rents will handle the complete full principal, interest, taxes, and insurance on that mortgage payment. So again, there are ways that we can go about qualifying people without necessarily W-2 or pay stub. But I would say about 95% of the loans that have been written since 2008 have been full income doc qualified borrowers. So we are not going to run into the same kind of crazy foreclosure market that we did during the Great Recession. We also have a lot of people with a ton of equity, which I said earlier. If you have a ton of equity, why in the world would you let the bank take your home when you could just get it listed for sale? So William says, but still no reasonable offers. And again, William, right now in today's market, and I'm very frank, I am very straightforward, and I do not lie about anything, and I don't hold anything back. I don't bite. I'm super nice. You guys watch the show because of that. I'm not trying to be mean, but if your home has been listed on the market since January and you've gotten a couple of offers that have come in low and you haven't gotten any offers since that time, you very well may just be listed too high right now for what you want. So you've got options. You could pull the home off the market. You could wait a little bit. You could put it back on the market at the same price. We are just starting to come into our normal buying season. So when always with real estate, we see that in the spring months is when we really start seeing buyers start getting out there and getting very excited and getting pre-approved, and they all start going in under contract. They start looking at homes in April. They start going under contract in May. Properties and deals start closing in June. And we see this run all the way through about Labor Day weekend. Then we really do slow down. So we go through months where we slow down quite a bit because of holidays. The biggest driving factor of the seasonal real estate market is school. The kids are in school really from middle of August until middle of May. Some states, depending on the state, would be beginning of September going through, middle of June. And most families do not want to have to make a move during the months that the kids are in school. Then also you throw those holidays in there. You throw Thanksgiving in, you throw in Christmas, you throw in Hanukkah. You start getting into the, winter months. And so depending on where you live, the winter months, it's brutal. I mean, it's brutal when it's cold. It's brutal when it's raining. It's brutal when it's snowing. A lot of people don't want to go out and look at homes trudging through, the weather. And so we see a huge pickup this time of year. And we see that go all the way through about Labor Day. So number one is you may just be listed a little bit too high, and that's why you might be sitting. You have to remember again that interest rates are high right now. So it is expensive for somebody to purchase a home at the top of the market prices and the top of the market interest rates. So if it really is your goal to get that house under contract and to get it sold, you may want to talk to your real estate agent about doing a price reduction. You might just be listed too high. If you're not listed too high, then just hold steady. We are just getting into that market. We are getting into this season. We're getting into the home buying spring. Let's go. Now, and I can see Why Not jumped on and said, happy Wednesday also. Why Not? Thank you so much. And Lori, I didn't mention you, and she says hello. So again, I love that you guys are all on. I love that you're watching the show, and I want you guys to ask your questions. This is an interactive show, so I want to make sure I get you guys the information that you are looking for. So we were talking about the season. This is the buying season. Now, one thing I want to talk about too is that I mentioned that as interest rates come down, we are going to see more people. We are going to see more demand, more people wanting to buy, and we are going to see more inventory because those that have been waiting to sell their home for interest rates to get down to a better level, they are going to start to list their homes for sale. Now, one thing I do want to mention is last week on Wednesday, I did my show and I talked all about how the Friday before, so follow along with me, last week, Wednesday, and I don't have a calendar in front of me, but I believe that was the 9th. I believe it was April the 9th. So the Friday before that, so I think it was, that's the 9th, 8th, 7th, 6th, 5th, 4th. Okay, so let's call it the 4th. April the 4th was the best interest rates that we've seen since October of 24. We had a 1-day drop. I mean, Thursday was good. Friday was the best rates we had, and we bounced right back off of the levels. We hit resistance, and we bounced right back up again. And you guys can watch the stock market. As the stock market's doing great, interest rates get worse. As the stock market starts to tumble, interest rates get better. It's just kind of the way that it works. So Friday was the very best interest rates we've seen since October of 24. And I can tell you that just from those 2 days, that Thursday and Friday, with things getting better, that we saw an uptick in pre-approval applications, refinance applications, and purchase contracts, people actually going in under contract. So if those 2 days alone of better interest rates getting down into, the mid to high sixes for a conventional loan, or the low to high fives for government financing, FHA, VA, if just 2 days of that sparked that spike in those applications, pre-approvals, people under contract, real deal purchases, and refinance applications, when those interest rates really do hit a level, I would say about 6.5% for conventional and about 5 3/4 for those government loans. When we hit those levels and then continue to drop from there, we are going to see a huge spike in demand. So yes, we're going to see more demand. We're going to see more inventory, but we are also going to see a huge spike in demand. So just keep that in mind. I wanted to debunk what you guys are seeing online. I wanted to explain that what they are saying, although if you hear what they're talking about, it does make sense. Coming from somebody that has been in the industry for 30 years, I am very, very up on everything that is happening economically. I have to be. This is my job. I do loans for a living. I help people get connected to real estate agents to, buy and sell homes. I make sure that they're getting good deals on the commissions that they're paying. I make sure that they're maybe getting some credits back to help with closing costs. And I'm obviously writing mortgages on a daily basis. I can tell you that I do not agree with what you're hearing. So if you are one of those people that have been wanting to buy a house and you have put it on hold, go back to the day that you thought I'd love to buy and what were home values at that point in time. Where are home values today? Has it done you any justice to have waited? Now, somebody that bought a home last year, sure, they took an interest rate at 7.25%, 7.5%, but their home is worth more today. Interest rates are on their way down. They are not getting in at a time where there is going to be an abundance of demand by waiting for the interest rates to come down further. In that space, they are not having as much competition in getting offers accepted. They're having more luck in getting sellers to help with some credits towards closing costs. So do not wait, you guys. The bottom line is that if you need to buy or you need to sell, we are right around the corner from those things starting to spike, the demand and the inventory. And right now is a really great time to jump in and get started and get ahead of the curve. You guys can look up all kinds of articles. There's one that came out 4/7 from Forbes. And so I'm looking at my other screen right now. I'm not trying to ignore you guys. Housing market predictions for 2025. When will home prices drop? If you read that, that is from Forbes. They are a money magazine. This is what they talk about. They explain in more detail than I did why they don't believe that that is coming. Sure, there's going to be some pockets around the United States that are going to see a little bit of adjustment. They do feel that there's going to be some deceleration in the equity that you're going to see. So what does that mean? So basically, we have been seeing historic price increases, historic people getting equity in their home at at percentages that can't be sustained. We've seen property values just absolutely jump crazy amounts really since 2019, 2020. They do think there's going to be deceleration of home value appreciation. So how much are homes going to go up in value? We are going to probably slow down. We may not go up in value at all, and we may even come down just a little bit. But is there a housing crash around the corner? Nothing's crashing, guys. It truly isn't. You guys can do this. You can search, you can Google, you can read up on it, and obviously come to your own decision on whether or not you agree with me or you agree with some of these other people that are giving you this information. But I can tell you again, from being a veteran in the industry, doing this for as long as I have been, I started selling homes in 94. I started doing mortgage in 2002, and we're in 2025, guys. So I've got a lot underneath my belt. I have been through the massive earthquake that we had in Northridge in California. I lived through that. I watched the property values literally plummet because of something that was, out of people's control. I have lived through the Great Recession. I have watched what happened in that situation. I have lived through COVID. I have watched what takes place when the Federal Reserve decides to drop interest rates to zero and leave them there for way too long. And I have watched what happens when inflation gets out of control, which is where we've been. And we're now starting to get that inflation back under control, which is very exciting. But I have been through all of the waves, the bumps, and all of the ups and downs. So I hope that you guys understand what I'm trying to say. I want you guys to give me a call if you want to discuss it further. I want you to get on my website. I want you to go to mortgagemomradio.com. Do not forget the radio. I want you to schedule an appointment with me so that we can have a conversation, whether you've been thinking about buying or selling. If you're thinking about upsizing, downsizing, or buying your brand new, very first home, I want you guys to schedule that appointment. Get on a call with me. Let's talk about you. Let's talk about what you've got going on. Let's talk about your timing. Are you in a rental now? Is your lease up at a certain particular time? If you live in California, because of the wildfires that took place. You have to realize that rents are up. Home values have actually spiked in many of those communities because there's an even bigger shortage of homes because of those fires. So those fires did not drop values like the Northridge quake did that we had. So really, it's, there is a lot that nobody can tell you exactly what's going to happen. Nobody has a crystal ball. Nobody knows exactly what might take place tomorrow. There could be another natural disaster that nobody could obviously predict or see coming that could absolutely change my views or my thought process on where we are today. But I do think that it is a very good time to buy. I think that we're at kind of a stalemate right now where there are going to be some of those sellers that are not like William, that don't, need to be in a rush to get something sold, that are going to negotiate a little bit more. I think there's a lot less buyers in the market right now. So there's less demand and there's less competition. And I think it is a great time to get into the market and to lock something up. And if you own a home and you have an interest rate of 3-4%, I would really urge you to talk to me about putting that home on the market. Let's see if we can come up with a better situation, a better option that you could possibly hold on to that real estate. You could keep that. You could make that property a rental, whether it's a long-term monthly rental or whether it's a short-term vacation Airbnb type income that you could earn. But I would really urge you to talk to me first before you do go and sell it, to see if it might be an opportunity for you to start to build your portfolio. So with that, I don't see any other questions that have come into the chat. I hope that you guys all have a fabulous rest of your week. I will be back here again next Wednesday, every Wednesday at 1 p.m. with another hot topic that is going on in the market that we need to talk about. If you want to know when I go live, you are watching this YouTube at a later date and you want to get on and get interactive and ask your questions, please text the word live to 844-935-3634. That's 844 We Lend for You, WELEND, and the number 4. If you used to get text messages from me and you don't get those text messages anymore, that is because I used to have that live word, used to be mom. And I changed it and I sent out numerous text messages to let you all know to opt back in by responding to the text message with live. And many of you didn't. And then I'm getting phone calls saying, I didn't get your text message. What's going on? And I've got to opt you back in. So if you're not getting those texts anymore and you don't know why, and you're catching this show at a later date, just make sure that you text me again. It's very simple. LIVE 844-935-3634. Go to the website, mortgagemomradio.com. Book yourself an appointment. Send me an email. Hit the contact us button. Whatever you've got to do to get in touch with me, let me help you. And with that, I hope you guys all have a fabulous rest of your week. And I'll be back next Wednesday at 1 p.m. Talk to y'all real soon. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.